Hey guys, so right now we are getting a lot of questions about why is the stock market so high? I mean the Nasdaq right now has basically hit an all-time high. It's very close. I mean, it's literally 1% away from an all-time high. So there's a big disconnect between the stock market and what is actually happening with the numbers. And today we're going to talk a little bit about why that's happening, what investors are seeing, why people are buying the market and not selling it. So, Joe, I mean, what's your first impression? Why is the market so high? What is the number one reason in your opinion?
In my opinion, I would say FOMO.
Yep.
The fear of missing out. So as you see it going up and up and up, everybody now is thinking, oh God, I'm missing it. I want to jump in. Behavioral finance, right? So as these people continue to jump in, it's just going to drive those numbers up because of supply and demand.
Right.
I think more demand.
Absolutely. I think that's a huge reason. I completely agree. I do think that there's a lot of people on the sidelines still. Money market accounts. Money market are your cash positions, right? They have seen record inflows over the past couple months. So, and they're still at all-time highs, since I think 08, 09. So there's more cash on the sidelines than ever. So FOMO has been happening, but I think there's a lot more to go though when it comes to FOMO, because I think a lot of people still are afraid. And if we get above this 3,000 mark on the S&P, we might see even more extreme buying and contributing to this bubble that we're really seeing. I guess the second thing is, how do you feel about the Federal Reserve?
I mean, they've give us some stimulus, right? The stimulus package they put out there is insane. I mean, Powell just came out and said we have more ammo, so that's going to drive it up more as well. I mean, Powell learned how to talk.
And Powell is the Federal Reserve chair. I mean, for those of you that don't know, he comes up with the policies, kind of makes the executive decisions in regards to where we're going with interest rates and how much money we're printing, things like that.
Yeah, and he so Powell used to not know how to talk. There were a lot of times that he came out and he just butchered his speeches, and because of that, the market would sell off. So the market reacts on news, reacts on fear. A lot of different things are driving factors, and now that Powell is speaking positively and bringing good things to the table, that's going to drive it up.
Well, Powell said he's not going negative interest rates too. There's a lot of people that were talking about negative interest rates. And, for those of you out there who don't maybe know what negative interest rates are, think of it kind of how our whole economic system works, but the opposite, right? If you went to go take out a loan, they would pay you for that loan. If you had to store your money in a bank, you would have to pay the bank to store your money in the bank. Isn't that kind of a crazy concept? I mean, It's something that we've never seen. And they're really afraid to do that because they think the whole kind of economic system would kind of be seen as different. It wouldn't be perceived to be a stable kind of economy that we.
And there are countries that have done it.
Exactly, there are countries that have done it. But the thing is, Powell said they don't want to do that. The market might have been hoping that was happening because the lower interest rates go, the more equity prices are propped up. But at the same time, they're continuing to print all of this money.
Yep.
And where's the money going, Joe?
It's going right into the economy.
It's going right into the economy, but it's going through different ways, right? It's going through stimulus checks. It's going through supporting small businesses. But
PPP.
the PPP small business program is running out of money. So are they going to renew that? Unemployment. They're supporting this huge unemployment right now that we're seeing, 35 million plus.
Yep.
And more people right now are making more money unemployed than they were actually working. Isn't that crazy?
Yeah, because the motivation is gone. Right? So if you're making more money than you did when you were working, why would you want to go back?
Yeah.
Right? Especially if you're a server, because you know that the capacity is going to be different because they have those weird shields up at these restaurants. People aren't going to be going as much. So they're scared to go back.
Yeah.
And then it just is creating this motivational craziness that these people aren't going back. And then they're saying that they're going to give them more. So I don't know. To me, that's going to be a long-term bad thing.
It could be a long-term issue, but when we talk about the topic for the day being why is the stock market so high, originally when these unemployment numbers came out, like today, we had a big unemployment number come out. 2.4 million was estimated. It came out a little bit above 2.4, so even worse than expected. Over the past 3 weeks, every number that's come out for unemployment has been worse than expected. But the market goes up on that news. So at first, everyone was kind of amazed, like thinking, why is the stock market going up when the news is worse than what was expected? People were blown away by that. But now they're realizing that people are making more money being unemployed than they were actually employed. So that means they're going to be spending more money because they're going to keep the same lifestyle. They're not even going out and spending money because there's nowhere to go.
Look at Amazon.
Yeah, so they're exactly. So Amazon, they're pumping their money into Amazon, all the extra money. Who knows what they're doing with the extra money, but they're making more money. So that's why the stock market's going up on the news, which is something crazy. It's doing the opposite of what it should do.
Exactly. And just a quick side note, if you are getting unemployment checks, just realize that those are not taxed. So please, please, please open yourself a savings account.
Yes.
Put 15, 20% away, or you're just going to get hammered when it comes to tax time.
Yep.
So just, quick PSA announcement, just wanted to make sure that you guys aren't.
Yeah, I mean, it's definitely something that, is going to come up next year, tax season. I mean, people are going to get hit very hard who don't know that. So there's a lot of things right now, like I said, that's happening. There's a big disconnect. You got the Federal Reserve. You've got the market trading on FOMO. You've got all these different kind of issues coming up. I mean, is there anything else, Joe, that you can kind of think of why the market is where it is?
So, I mean, we're hitting some levels, and if you go into technical analysis, where are we at with that? Because
right now, 299 or 2990 on the S&P, which is 1% higher than where we are now, sits the 200-day moving average. Typically, the 200-day moving average acts as support or resistance. So if it's above us, it's going to act as resistance for the market. So I think a lot of people are buying the market, hoping we touch that, and are looking to sell the market at that price. So that's going to be a key level that we watch going forward. The second level that we broke through, that was something that everybody was watching, was a 61.8% retracement on the Fibonacci on the S&P 500.
So explain that. Come on.
I mean, okay. So this is a 100 level class, not a 400. But what I can explain is Fibonacci was, this great scientist, mathematician back in the day. He founded the golden ratio, and he found that 61.8% ratio came up in a lot of aspects of life. I think the ratio between your pinky and your elbows, like 61.8 or something like that, from the end of your pinky to your hand. The bees' reproduction is like 61.8%, something to do with the reproduction there. And then they applied it to the stock market in the 70s, and we're like, hey, if we applied a 61.8% retracement from one level to another level, what would that act as? Would that act as a support, resistance? What would that be? And they found that was where a lot of sellers ended up stopped selling their stock. So a lot of demand came back, buyers came back in, and acted as a support level to bounce on. Well, after support's broken, though, it acts as a resistance. So it's supposed to act as a resistance right now, and the market's hovering right around that level. So what I'm curious is over the next week, how is this level going to play out? Are we going to sell off hard from this, and are we able to maintain above this level? That's a key technical indicator. Yep. So I think you're exactly right. A lot of the market's trading on, all this crazy Federal Reserve stuff, all this FOMO, and then all these technical levels are just getting broken above. Yep. And we were extremely oversold at the bottom. So with all that being said and done, I think there's a lot of things that's contributing to the market being up, even though valuations make really no sense.
Yep. So from here, we want to know, where do you think we go from here? Do you think we're going up? Do you think we're going down? Leave a comment below. Let's get a debate going. Let's see who's going to be right out there.
I like debates, and if you guys start debating out there, we'd like to have you on the podcast. Especially a bull and a bear. So we're going to pick some of you guys who contribute to the responses below, and maybe send us a message and say, hey, I want to be on your podcast and I want to debate where the market is going. We'd love to have that.
Yep. So. Next week we should be having our first guest, but. Memorial Day weekend. Have a wonderful weekend. Enjoy your family. Enjoy being outside. It's finally supposed to be nice out at least in Northeast Ohio.
Surprisingly, it's supposed to get up to 80 degrees.
It's going to be great. So have a great time and stay safe out there, guys.